Hello everyone and welcome to the new weekly update. So today is the 6th of October 2023 and it's Friday. I hope you're having a good day, and as some of you might already know, my name is Phil and I'm with Pragmatic Trading. So this will be the second and the last weekly analysis for this week. I hope you're enjoying your Friday and I hope you're preparing yourself for a beautiful, or let's say a wonderful weekend ahead. So I usually start every video by showing you, by doing a quick recap of what I have said in my previous videos, and if I have posted something on Twitter, I always show you that too. So if you feel ready, let's buckle up and let's start this analysis. So first, I would like to do a very quick recap of what I have said in my previous video. It was posted 4 days ago on Monday. I'll turn this music off for a moment. I'll turn up the volume and let's hear what did I have to say. Alrighty, listen carefully. It goes up and down as long as you have a plan and as long as you follow your plan. So we have this fib level here. We have this structural retest. Why do I say structural? Well, this was a resistance, right? Of course, and the price and asset can confirm that resistance, previous resistance as support, and shoot higher. So you can see this arrow. Of course, it's just an arrow. It doesn't have to happen like that, but we can check if something similar happened. Before we go back to the charts, I would like to continue playing the music, turn down the volume so you can hear me clearly, and let's move on. So let's jump on Twitter. I suggest you to follow me on Twitter because sometimes I don't have time to make a video analysis every single day at every single moment, especially when something changes on the chart. So if you want to be up to date, if you want to see what I'm posting and what I'm thinking and what I'm analyzing, feel free to follow me. My username is Pragmatrader, @Pragmatrader, and the name of my page is Pragmatic Trading. So let's go back in time. Let's go back to the 2nd of October. That was Monday, right? 4 p.m. What did I say? First weekly analysis is being uploaded as I'm posting this. Now, I see a potential rising wedge with the regular bearish divergence on 1 hour. I wouldn't put too much hope because I don't want to fade a whole strong trend upwards. So let's open these two pictures. You can see that on the chart too. This is the 1 hour time frame, but let's not lose any time. Let's be effective, right? So what do we see here? Well, we see higher highs in the price action and we see the series of lower highs in the RSI. That's a regular bearish divergence. As soon as I saw that, I entered the short position with a tight stop loss, only 0.5% above. So that was the market order. I usually use limit orders, but sometimes when I don't have a limit order above or below, and if I see a potential move preparing itself, I will use the market order. Alright, so what do we see on the second picture? What is this? Okay, it's pretty much the same. Yeah, so I've had two targets. Take profit targets. The first one was at 27.7, the first fib level, and the second was at 27.2, 27.1, etc. in the zone. So I was fairly convinced in this trade. I took the trade and I was lucky and skillful enough to execute it perfectly. Now, I will not show you what had happened. I'm pretty sure most of you know if you follow the price action. So we will just skip to the next tweets that we had here. So let me see, October the 5th, that was yesterday. Now, in one of my previous tweets, you can check it here. I'll lose too much time if I try to find it, but in some of my previous tweets I said that I will long at the very same place where I take profits from my shorts. So this was the outcome, okay? I have longed at the same area that I was expecting to be the area of a bounce, a temporary bounce or a continuation bounce, we don't know yet, but that was the area that I was interested in. So what had happened, you can see that in a matter of days or 24 hours, my long has been triggered and I have closed 60% of my long. The rest of my long is still running, so 40% of my position is still open from the same entry, okay? Now, this is very important. I leave 40% of this long open and 30% of the short from the 28.4 highs open. So what does it say? Or what does it mean? It means that at this point of time, and then yesterday, I was, and today I am fully hedged. What does it mean? Well, I truly and honestly do not care where this asset will go. It can go up, I will end up being profitable. It can go down, I will end up being profitable. It can go sideways, and it can stop out my short and stop out my long, right? But I will still end up being profitable because I have partially closed my short here and I have partially closed my long here. The rest is running. So that's all you need to know about what I have done this week. I'm still on a winning streak, so I'm pretty satisfied with my market outlook this week. So I don't want to lose more time saying what had happened, what could happen. Now let's talk about what is happening now and what do I see for this weekend, and to be more precise, for the beginning of next week. So as you already know, I always do my best to do a very detailed, a very thorough analysis. So today nothing's different. I will try to do the same. So let's go one by one, and once again, thank you for being here with me. I hope you will find some value in my second and last weekly analysis for this week. First, where should we start from? Well, I would start from the weekly descending trend line, because that's something that I did not show you before. I've had these descending range trend lines, and they were the daily and the 4-hour trend lines. You can see it here, and I've shown you in my previous videos that we rejected from them, then we consolidated below the resistance, we broke that diagonal resistance, we retested it in this daily candle here, and we shot higher. So if you have watched my previous videos, you would know that I've predicted this happening as one of the possibilities. And if you haven't watched my videos before, if you have time, please consider watching them. You will see that I have said, or I said, this could happen if we reclaim these levels here. We had the value area high of this range that started here. We had these descending trend lines, we had the fib levels, etc. I don't want to repeat myself. There's no need for that. So what I did not talk about was this weekly descending trend line. Okay, so we've talked about the daily and the 4-hour trend lines. You know that I mostly use candle bodies for the trend lines. So since this is a weekly trend line, let's skip back to the weekly chart. Okay, let me move this Pragmatic logo a little bit. It's so beautiful, at least in my opinion. I like it. And let's talk about it. So if we turn on the weekly line chart, we will see that I could draw this trend line using these two highs here and the middle of these wicks. So when I draw the trend line, I do my best to look at the chart at the same way as institutions and big players do. That's why I use the candle bodies, because they are more relevant. Yes, you can use the wicks too. Yes, an asset will react to the levels that you've got from the wicks, but this is my preference, this is what I do, and I'm showing you my analysis. I respect everyone and their trading styles and analysis, etc., but this is how I do it. So let's go back, and what will we see here now? Well, we can freely skip back to the daily chart, okay? and we can see what had happened. Well, I've talked about the 28k, 28.4k scenario many times in my previous analysis, and I've talked about that scenario back when we were at 26k, right? I've shown you this place here, this zone. I will turn off these fibs, I'm very sorry, and you will see that one of my zones, the higher zone, produced a very nice move towards the 28k, which is almost 10%, or 10% if we include the wicks, right? So that's a very good move. My zone, I'm happy to see my zone producing such a nice move. So after we broke the daily and the 4-hour trend lines, we have, or let's say Bitcoin has met with the weekly trend line. Now, what did I say in my first videos? Well, any initial touch, any initial contact with a very strong diagonal or horizontal level can and most likely will produce a nice reaction. So what did happen here? Well, we deviated on 2nd of October, on Monday. We deviated above the trend line, we couldn't close the daily candle, and we have rejected back down. So that was the time when I posted that tweet about the rising wedge, and that is exactly why I took that short, right? I've had more than 2 or more than 3 things on my charts. I've had this regular bearish divergence, right? Higher highs, lower highs. I've had this pattern that looks like a rising wedge, and it played out perfectly. Okay, I'll delete this one now, and let's stop talking about the past. Now, what had happened ever since then? At the beginning of this video, I've shown you why I found this zone as relevant enough to produce a bounce, and why did I expect a move like this, right? We have this very important fib level at 27.1, right? We have these 2 structural retests. If we go back to the daily chart, we can see them again. It's only 2 clicks away. I can do that for you. So we have that structural retest and this one here, which hasn't been retested, this zone that hasn't been retested. Besides that, we had the traditional pull of the whole range. This is a log chart, so if we switch back to the non-log chart, we will see that now we already have 2 macro levels which could produce a bounce. And no wonder today, on 6th of October, after the news, when price dumped really hard in such a short span of time, we have bounced again from the same level. So this is why I have taken this long. Let me show you. Let's switch back to the 4-hour chart and let's open the long position. Now, what is interesting about this long? Well, that's the long that I've closed partially. I've taken 60% of the profits here. Why here? Well, I will explain. First, you know why my entry was here. I've had more than enough confluence and confidence to enter a long, and I've had more than enough confluence and confidence to exit, to close 60% of my long here. Now, why did I close my long here? And why did I enter a short position there? Well, it's easily explainable. This yellow line, you remember, is the weekly trend line. We deviated above it, we've broken down below, and then we went back up almost to the dollar to retest it as a resistance. What had happened? Well, we had a beautiful, beautiful, beautiful rejection that happened instantly, right? So of course, in my trading strategy, one descending or ascending trend line is simply not enough of a confluence to enter a trade. Of course, I've had many different things there. Okay, so I will explain why have I closed my long partially here and why have I entered another short here, and I have this short from these highs still open, partially open. So let me remove this short position for now, and let me find, alrighty, what do we have here? Let's go one by one. First and the most important one, we have a traditional pool, right? So if we switch between the log and non-log chart, it is pretty clear that an asset reacted from a very similar zone. I've said many times the golden pocket and these two zones above are very important for an asset. Usually an asset gives a very strong reaction at these zones, but of course the trend line and this trad pool or traditional pool are not enough. Now what else do we have? Well, if we turn off this one, okay, we will see that I have measured, give me a second, where is the path? Oh, the training view changed everything, so sometimes for me it's pretty hard to find something. Alrighty, what did I measure? Well, you see this high and you see this low. I have measured the upwards potential of this wave down, okay? And you can see that these three very important fib levels are in the zone where the weekly descending trend line is, and that's exactly at the same place where, where these two fib levels are. Besides that, what else did I have? Okay, let's change the color. I have measured the potential of this wave. So this is the 4-hour chart. It can't be seen so nicely, but when we switch back to the 1-hour chart, we will see that we have this wave upwards. Is that correct? Okay, let me make it thicker and let's change the color to white so you can see it better. Now let's turn off these two again, and you will see that I use the trend-based fib extension to get this, and voila, you will see that these two very important golden pocket fib levels are right in the zone where we have rejected from. So we have the weekly descending trend line, we have the context of a retest, right? Broke down below, retest above, right? So we've had three different pools that point to the exactly same zone. Let's use the rectangle this time, right? We have three different pools at the same place. And that is exactly why I closed 60% of my long, and that is exactly why I have opened another short in the area. So I think this is pretty clear enough. I was very confident about this trade. I have executed it perfectly, and I've got a very, very strong and fast reaction downwards. Now, now I have two shorts open. I hesitated taking profits here with my short. Maybe I should have, just maybe, but I don't care because my long here is still open with stops wider below, because I have already secured most of my profits from this short and from this long. So wherever price or an asset goes now, I will truly not care. I can enjoy my weekend, I can sit back because I am fully hedged. Okay? Now let's not lose too much time saying or talking about what had happened. Okay, now I would like to take the second part of this video to talk about what might happen in the future, and I believe most of you find more value in that, but still I need to prove myself to you in a way, because you don't know who I am. I have just started making videos. This is a fairly new channel, even though my Twitter account is more than a year old, almost more than a year old. I'm sorry, almost more than 2 years old. And I have, oh my god, 3,272 posts already. So let's get back to the charts. What is interesting about the price action now? Well, today we have had some fundamentals, right? Some news. We had average hourly earnings, a non-farm employment change, and unemployment rate. So I can go in details and talk about this, but this is a technical channel. I am a technical analyst first. Yes, I do look at fundamentals, but I would not like to lose too much time talking about these fundamentals here. Yes, fundamentals can and will influence the asset, but in my opinion they are just the fuel for the car, and technical analysis is where the car might go, right? So let's turn off these two rectangles and let's talk about what can happen. Okay, so one of my predictions came true, right? I have said in my previous video, I have marked this zone and I will mark it again. Let me just find the rectangles. I can't find them here. Never mind. So what do we have here? We have this fib level. If you wonder what is that fib level, I can tell you it is 38.2, one of the most important fib levels when compared to the golden pocket and other levels too. So what is happening now? We have this crazy little wick here, right? We have this crazy wick here. And how did that happen? Okay, well, news. News are the fuel for an asset to move like this. Now, if you switch back to my first video, it was called Trading the FOMC, CPI, and Other Volatile Environments. In that video, if you haven't seen it before, I was talking about how you can trade the news. Okay, so basically what you should not do is enter the trade during the news, okay, during the fundamental readings. Why? Well, isn't it obvious? 2:30 p.m. okay, we have a very strong dump and we have a very strong recovery. So anyone who entered a short position here was instantly liquidated in the next hour if they didn't close their short, and anyone who entered a long inside of this wick was probably liquidated too. If you had targets before the news, fine. If you didn't have them, well, I hope you stayed safe. So what could happen now? My first zone gave the first reaction. Now we are experiencing a second reaction. I will be brave enough to say that as long as we hold this structural retest and this fib level here, this asset is bullish inside of this range. What does it mean? Well, all of this price action here and the weekend price action that we might experience could just be a consolidation below a descending resistance, which could lead to another leg up to the zones that I marked before. So I've talked about those zones in my last videos. I don't have time, or there is no need for me to talk about them once again, because if you want to see how did I get those zones above, you can watch my previous video. Now give me a second. Current zones of interest. We have 28k, 38k hard to break zones. So those zones are around 29 to 29.1k and 29.5 and 6k. If you are interested in seeing and hearing how did I get those zones, you can easily get back to my previous video. Now, let's turn that off. We have a current zone of interest. Now, what is interesting about these two zones? Okay, what is interesting about them? Well, you see that we have this high to the left and we have this high to the right. We are currently between these two highs, okay? So any daily candle close in the next few days will be very interesting, because it will tell me and others where this asset could be heading, right? Above or below. So once again, one of the first scenarios, according to the textbook, is that this is a consolidation before another leg up. When will that happen? We don't know. Next week we have some very important news, okay? Next week we have the PPI, core PPI, and we have the core CPI and CPI month to month and year to year. So next week I expect a lot of volatility, okay? So what supports this scenario here? Well, let's take a quick look at Dixie. What do we see on the daily chart? Okay, after 12 weeks of constant upwards move, we have some slowdown, right? So if we turn on the daily chart, it makes sense, because what do we see here? Once again, let's use all the tools we have. What do we have? We have the higher high in the price action and we have the lower high in the RSI. That's the regular bearish divergence on the 1 hour. So I do expect Dixie or DXY to retrace a bit lower before continuing higher. This is a double-edged sword. Why is that? Well, this is the dollar index, guys, okay? Any fundamental news, for example, bad CPI readings, etc., can help dollar to invalidate this divergence, or it can help it to move back to create another high, to deviate above this wick here, right? To deviate a little bit to create a triple bearish divergence, and then it can retrace deeper. So current state of Dixie supports this scenario where we consolidate below the area of resistance, like reaccumulate, consolidate, and shoot higher. So as long as we hold these levels here and here, if we close the daily candle above, we should be fine for the bullish scenario. Okay? Now, what is the bearish scenario? Well, bearish scenario is a bit tricky. Why? Well, first, currently we have this crazy wick, so we know there is a lot of demand below. Okay, people are interested in this level and people see a new high happening. I am fully hedged, but I am talking for your own sake, for your own safety on the markets. So if we have a bearish scenario, it can play out after the weekend during the CPI. So if we range during the weekend, if we go sideways, and most likely we will, even if we go higher and reject and go back, weekends are usually slow, and sometimes, let's say rarely, we have a very strong and volatile weekend move, but I seriously doubt this will happen this weekend now. So the bearish scenario number 2. If we have a sideways weekend and if we get bad CPI readings, I do expect us to wick higher above the trend line or somewhere below the trend line, or even if we consolidate here, if we break it somehow during the weekend, I do expect us to wick higher to chase the liquidity of all of these shorts and then have a very violent and strong rejection downwards where we will take all of these higher lows, all of these potential higher lows. So I seriously doubt the bearish scenario will play out in the next 2 or 3 days. It's weekend, now it's Friday, it's almost end of the day. We did reject from this structural zone and from the 3.382 fib zone, so I do believe the bearish scenario will have to wait. As I said before, I seriously doubt anything significant will happen today, tomorrow, or in 2 days, but I will be here for you. I will spend some time outside. I will take a good rest because I have worked a lot this week, and if anything comes up, I will be here to tell you. Now, before I finish this video, I don't want it to be too long. I want to show you a few more things. Okay, first, I haven't talked about the pitchforks in a while. You remember I've had 2 macro pitchforks and 2 local pitchforks. Now, what is interesting about these local pitchforks? Let's take a look at this one. I've told you in my first 2 videos, and I've said this in almost every of my videos, that top of the pitchfork is usually a good place to short. For now, this has proven itself to be correct, right? Bottom of the pitchfork is usually a good place to long. Now, will that long produce an even stronger move upwards, or it will just be a retrace until a bearish retest and continuation? No one knows. But that's why it is your responsibility to secure your profits partially and manage your risk, right? So what is interesting about this pitchfork here? Well, we are still below the top of the pitchfork. Okay, this supports the bearish scenario where we consolidate during the weekend, reject once again during the CPI or before, and then continue back down into the range. Okay, besides this pitchfork here, we have the anchored volume profile of the current local range. What is interesting about it? Well, value area high was reconquered as support once again, and we are still above the value area high, so we are still more bullish. Does that mean we will keep going up? No, it means that we should be careful in this range. So if we experience another strong rejection, I will be looking at this pitchfork and I will be looking at this value area high. What is also interesting about this pitchfork? Well, look at this wick from today. We have bounced exactly from the golden pocket, right? Resistance, resistance, support. Will it hold? No one knows, we'll see, but that was another good long entry in case you haven't entered a long already like me on this wick here. So let's turn off that local pitchfork and let's take a look. Give me a second. Yes. This is the medium 2022 ascending shifts pitchfork. You see how did I get it and what is interesting about it. In one of my previous videos I've said that the median line is as powerful as the bottom and the top of the pitchfork. Why is that? Well, the median line is the middle of the pitchfork. It's 50%, and I've said three things can happen. We can get to the median line, we can dance around it and then continue the move or retrace the whole move. Is that correct? Yes, that can happen. The other scenario is that we have a very short consolidation and then the continuation, and the third scenario is a very strong reaction and or reversal down if we are coming from below, right? So among all of the things that we had here, the 1 hour bearish divergence, the rising wedge, we have also had this macro level which could give you more confidence and more confidence to enter a short. Now, did you take profits partially like me, or do you want to keep your short open? That's your own thing. I'm not a financial advisor, and you are responsible for your own trades, just like me, right? So let's turn this off, and I think this is it according to the pitchforks. Now, I found something interesting. Oops, I'm sorry. I've done the analysis of the potential targets below, right? So, as long as this local high isn't reconquered, as long as we don't make a new high somewhere here in the zone, this target is relevant. Why is this target so interesting? Well, you see this fib level. This is the traditional fib retracement of the whole range from this bottom to this top. And this fib level is exactly at the same place as this fib level here. How did I get it? Well, I'll use the path again. This upward move, I am measuring the downwards potential of this upward move. So if this high remains the highest lower high according to this one, this target will be relevant. If we make a new high, this target becomes irrelevant and we have a new pool, right? So 25.65 is a very interesting zone to me, and if I turn on the anchored volume profile, you will see that the value area low, sorry for laughing, sits at exactly the same place where these two levels are. So I will draw a rectangle now and I will leave it there. Please give me a second. Let's draw it like this. Alrighty, and let's put it where? Try to pull scalp pull between these two. Alright. So guys, you know my scenarios, you know what to expect from the weekend and from the beginning of next week. I hope that you are fully hedged. I hope that this choppy market was good enough for you to take some profits, to secure some profits, so you can be able to enjoy the weekend. If you have watched my previous videos, you could see that I can say this with confidence, that I have nailed every single move since 26k. I even gave you this bottom before it happened. I gave you this consolidation. I gave you 28k, 28 and 28.4k as a potential target, as a potential scenario. Then I gave you this bottom in advance, and then I gave you this top. Now, what's gonna happen next, I don't know, but as always, I am prepared for both scenarios. I have targets above, I have targets below, and that is exactly how I analyze and trade. So guys, if you have any questions, if you want me to analyze some other assets, some altcoins or anything, please let me know down below in the comments. As you can see, I always read the comments. I pay good attention to what are people saying about my videos. I'm trying my best to upgrade my analysis so I can be of more help to you. So feel free to leave a comment on Twitter or on YouTube, and I will do my best to reply to your comments and maybe analyze something for you. I know that you guys like to trade altcoins, etc. I know that some of you guys like to invest. Even though I'm a trader, I will analyze anything for you because I have time and I appreciate you taking time to watch my videos. Once again, if you find any value in my videos, please consider subscribing to my YouTube channel. Okay, if you want to be up to date, you can click on the bell button, which is somewhere around here, so whenever I post a video you will be notified. Besides that, you can follow me on Twitter. My username is Pragmatrader, my name is Pragmatic Trading, and this is where I post most of my setups and updates. So that's it. Today's Friday, almost it's Friday evening now. I'm gonna go to my friend's house to make some grilled chicken wings to enjoy the weekend. I wish you a peaceful weekend. I wish you a weekend full of love, and I hope that you will take your time to be off screen, to enjoy the time with your loved ones and simply appreciate life. As always, Pragmatic Trading loves you and wishes you all the best in the market and outside of the market. Goodbye. See you next week.